Market participants, the chief source of credit for second mortgage, whether of the deferred purchase of money loan type is the individual or the closely held private corporation. The reason is that financial institutions are generally precluded by law from accepting junior life on real property unless they also hold the first line. In 1950, individuals and others held about 85% of the total volume of junior mortgage debt outstanding over residential properties. The surveys in Los Angeles and Middletowns for later years indicate the continued dominance of individuals in the market for second indicate the continued dominance of individual in the market for second mortgage. If the 1950 census finding approximated the 1956 situation as well, then individuals held on an estimated 3.6 billion in second mortgage. At the end of 1956, this was about one fourth of the 14.8 billion in total mortgage held by individuals at the end of 1956. Many diverse types of individuals and firms maintain varying professional interest in junior mortgage and make a market for them. The interest may be incidental to main activities, sideline investment, or the primary or sole activity. The chief types of market participants are real estate brokers, real estate speculators, mortgage brokers, mortgage traders, mortgage investors, and investment syndicate under trust arrangements. Real estate brokers not infrequently have to find a market for purchase money mortgage in order to negotiate property sales successfully. Real estate speculators typically operate by acquiring properties as cheaply as possible in all cash transactions and selling quickly at the highest possible prices by accepting minimum down payments and purchase money mortgage over a new first mortgage. Usually the speculator sells his purchase money mortgage quickly to get cash for continued operations. Some mortgage brokers and traders limit their activities essentially two transactions in the market for junior mortgage. While the number of such operations is unknown in the market investigated, there seemed to be few relative to the volume of transactions. Brokers in second mortgage perform the same function as brokers in other services or commodities by bringing buyers and sellers together for a price. Traders, on the other hand, operate by actually acquiring second mortgage with their own funds and reselling generally to individual investors for a profit. Operating techniques of brokers and traders vary as indicated in the next section. Investors in second mortgage comprise several different types of individuals and firms. Professional investors acquire mortgage for their own portfolios either by purchasing already created purchase money mortgage or lending funds directly on the security of junior property lines. Investment minded individuals acquire second mortgage occasionally for a supplementary income or if retried for major income. The investment syndicate in which individuals pool funds to acquire second mortgage is usually organized as a corporation by an attorney on account who generally acquires and manage investment under a trust arrangement. Market organization and techniques. The diverse groups of participants play their roles in highly specialized, widely scattered local market transactions. In primary and secondary markets are closely related and little organization exists in there In either market, primary transactions are essentially of two types, exceptions of a purchase, money mortgage by buyers and sellers of property, actual transfer of funds to finance purchase or continued ownership of property. The professional mortgage broker, trader, or investor plays a fundamental role in both types of transactions. In execution of a purchase money mortgage, he is a part of immediate primary transactions in transfer of funds. He is a necessary link to secondary sources of funds for second mortgage, largely non-institutional are usually not known to prospective borrowers. The service of a mortgage broker are generally essential to any primary junior mortgage transaction. He typically maintains a classified file of investor clients obtained chiefly through advertisement, circular letters, and word of mouth. The broker fee paid by the borrower for placing second mortgage varies with the amount of loan and between cities. In one large eastern city, typical fees are 2% for the first of loan and 1% for the rest. For small loans, the percentage charged is much higher to provide a minimum fee usually set by the broker. A major deterrent in placing new money loans on second mortgage in many states is a restriction on interest rates allowed under existing unsure laws. Maximum interest rates under those laws vary widely between states, from 6% in Washington, D.C. and New York to 10% in Florida and California and 12% in connection. In some states, corporations may not plead unsure and hence corporate owners of property, usually large scale, multifamily and commercial, can borrow on second mortgage more easily than individuals can. In states where unsure rates are low relative to yields in the open market, individuals can negotiate direct money loans only by giving to lenders large discounts through devices that comment the intent, if not the latter, of the laws. Because of interest rate limitations that operate in primary market transactions, many brokers and traders or investors confine their activities to the secondary market. Those transactions involve chiefly purchase money mortgage on which through legal discounts or bonuses effective yields are rise substantially above contract interest rate. The active secondary the active secondary market exists because purchase money mortgage created in primary transactions are often not retained by the individual sellers of property on real estate speculators. Rather than to hold such a second mortgage created as part of real estate purchase, they seek to convert them into immediate cash through real estate and mortgage brokers, mortgage traders, or directly through sale to known investors. Ultimate investors are located in the way already described for the primary market. Marketing techniques vary widely among professional operators. Brokers either upon circularized notice listing mortgage offering with details on prices, outstanding balances, underlying properties, first mortgage characteristics, and rent and expenses for income properties, or upon attempt to make their offices into organized marketplace with mortgage offering available. Some mortgage traders have adopted programs of selling second mortgage to individuals under repurchase agreement. The trade warrants to repurchase at the request of the investor any second mortgage in default for at least 45 days at the original sale price minus principal payment received. Such traders interviewed in this study had capital investment equal to at least 10% of their outstanding obligation. Both brokers and traders depend for their supply of second mortgage upon realtors, builders, and speculators who find it necessary to arrange junior financing. Recently, those groups have increasingly used advanced commitment technique basic in the market for first mortgage. The second mortgage broker trader, for example, makes advance commitment to a real estate operator or build to buy or fund a market for purchase money. Second mortgage created in a real estate transactions.